Joining me now is Pauline Lierman, Vice President Market Research at Zonda Urban, which provides research to the real estate industry. Hi, Pauline. How are you?
Good. How are you, Deval?
Good. Thanks so much for joining us. So,
thank you.
There was a total of 28 projects representing, I think, almost more than 5,700 units in the Greater Toronto Area and Hamilton region that were canceled. Do these numbers surprise you at all?
No, they don't. We're in a situation now where we've had the market has been coming down for the last 3 years. So we actually have a lot of projects that, I would say when we're doing all our numbers is on to urban, 70% of our unsold units, which are at a record high, almost 22,000 units, are actually from 2 years ago, from projects that launched 2 years ago. That's kind of abnormal because most of the time at that market high, projects would sell up to 70% or more, almost like 2 months out of the gate. So we're in a situation where they've sat around and it's just not tenable to actually reach to construction, which makes a lot of sense for them now being canceled.
Right. Geez. Now, do you think some of these canceled condo units will end up as rental units?
Yes, actually, we've seen about 1,500 already switch over. Particularly also when you think about the City of Toronto had the rental incentive, phase one that they announced before the holidays. So there were several projects on that list that were actually originally planned as condominiums.
Right.
So we're starting to see that. In fact, actually this quarter in Q1, we had almost half of what we had launched for construction starts last year as rentals started in Q1. So we're starting to actually see that switch. And there were like double the amount of condo apartments that started construction.
Jeez.
So a lot of rental, yes.
So, if we continue along the rental stream for a minute here, now those are expensive rentals. They're not actually, I'm going to say, quote unquote, affordable rentals, right? Like those are rentals where we're looking at a one bedroom is probably anywhere between $2,300 to $2,500 a month, something like that.
Yeah, that's fair. There are actually a bit of a range of locations now.
Okay.
Certainly locations that I would say that, in a lot of the downtown rentals that you see or maybe kind of more boutique areas, they tend to run about 10 to 15% higher in rent than they would normally versus a condo that would be in the area. We are starting to see a bit more of a branching out of projects. And I would probably start to expect to see a bit more of, sites that are more related to housing now in Toronto as well. Like, for example, the Wilson site at the Wilson station that hasn't quite started yet. They're doing geothermal work there.
And how many, I guess, sort of expensive rental units do you think our city can reasonably absorb? Because if everyone's switching to rental, but they're not even cheap rentals or going to say, quote unquote, affordable rental, they're basically expensive rentals. I mean, it's funny. I've seen it that rental units are just sitting on the market just a little bit longer than they used to. So how many of these expensive rentals do you think our city can absorb?
I think there's going to be a limit to that. I think the biggest thing that we have seen is because of the number of units that are being finished right now. And just pure condominium. We also have rental finishing. I would say between this year, we'll probably about 35,000 units finished. We're at a peak, and then it's going to drop off quite sharply. So I think there's room to absorb it, but I also think that because of how much rent is being completed at its present, that rents are going to kind of come down, and they have been coming down.
Right.
So I think there's going to be a recalibration overall.
Interesting. Now, the other thing, too, I've started to notice is, I guess, as we were talking about projects being canceled, I recently saw there's a project called Birchley Park, and they've got, right on their website that, due to ongoing challenges, they've, made the difficult decision to release all the condominium units. In fact, they're returning all the purchasers' deposits with interest, which actually seems kind of rare to me because usually I think the people who've purchased are kind of wondering what's going to happen to their deposit. That never seems to be clear. And then it seems to me that it's rare that they actually get their interest back as well. What are your thoughts about that particular case?
I think it's great that they actually did that. I actually know another site that went down into rental end of last year that did the same thing. If you're kind of like a AAA developer, that should be what you'd be doing with your clientele that have purchased at your site.
Yeah.
So I'm happy to see that.
And so do you think, I think there was last year, I think the Globe and Mail had written that there was something like 27 sites or condo developers that were in receivership. Do you see more of those projects going into receivership as we go forward this year?
There may be some more. Certainly the receivership end means there's usually not a lot of portfolio. They're usually smaller developers, or developers who we think that in the industry we've watched for a while and wondered whether their books work. That tends to be the thing. More than likely, what you might see with an established developer, if it gets canceled, is just be pulled off the market.
Right. Absolutely. Wow. And have you heard of any developers with, sales centers open that are actually ready to sell? Because it seems like this market is so bad that nobody's getting out there. So are there any developers that actually have their sales centers open and ready to go?
Oh my, there's a question. I had one launch for Q1.
Yeah.
Very specifically, more oriented toward end users in 905. And they put a lot of work into that. So they knew that it was going to be a long time to do it. Not that rush of investors because the investors aren't there. I've had a handful of sites that have been expected to open this spring, but now because of all the uncertainty in, certainly with the U.S. and 2 elections, that they kind of held off.
Right.
Anybody who thought they'd come maybe in the fall. It's tough this year. I think that, we didn't have a lot last year either. We had maybe 30 condominium apartments, more on the townhouse side, a lot more stuff on the townhouse side. So yeah, it's looking pretty bleak, I'd have to say.
Good. Okay. And on that happy note, Pauline, we're going to say thanks so much for being with us this morning.
Thank you for having me.
I really appreciate it. That was Pauline Lierman, Vice President Market Research at Zonda Urban, just giving us some insight as to what's happening in the condo development market.